Good morning, everybody. Welcome to this Resolution Foundation event. My name's Torsten Bell. I'm the Chief Exec of the Foundation. Now, we've got a treat today. We're going to talk about trade, but not just about Brexit. We are going to talk about it a bit, inevitably, before everyone starts sweating and frothing at the mouth, getting ready. But we're not going to just talk about that. We're going to take a slightly longer view over decades rather than over the last enjoyable 6, 7, 8 years. 8 years now. Oh, Christ. 8 years. And think about how has the exposure, the nature of exposure to trade changed in Britain over time, how it's changed for good, not just for ill, which obviously is the whole point. We're trying to improve the world, people. So we're going to talk about how it's changed. We're going to talk about who it affects and how that's changed over time, because in the end, if the last 150 years of watching trade policy and trade realities play out on our economies, it's that it has very different effects on different people. In lots of ways, it is distributional policy. And then we're obviously going to have time to discuss what that all means for the years ahead. Because one of the things, again, that we should have learned in the last 8 years is that we have some decisions to make on trade policy. Again, for the first time, it's a treat. There's an entire department wandering around doing a bit of stuff in that space. So what should everyone actually be doing? So that is the plan for today. We're doing that because we're publishing a report written by Sophie Hale, our principal economist, who's first of all going to give you a summary of that report, a short presentation. And then we've got two great speakers. You're going to hear from Sir Vince Cable, who tells me here is a full economist minister and author of many books. How many in total? How many are we up to now, Vince? 10 books. Some would say excessive. But you can tell us about the new one as well when we come to it, which is very much smack in this territory. Emily, I'm not going to ask you how many books you've written. And then we're going to hear from Dr. Emily Jones, who's an associate professor in public policy at Oxford University and has been wrestling with lots of these issues, particularly in big picture senses of how do countries deal with trade shocks and exposure to trade. And then we're going to hear from all of you. If you go onto Slido, it's hashtag trading standards. Do you see what we did there? That's where you can ask questions and vote in the poll. So do that. And those of you that are here in our slightly chilly basement this morning, people have coats on in here. This gentleman has a gilet, very 2020s. By 2030, gilets will be out again. But you've got a few years left to go. But if you're here, you can ask questions safe in the knowledge that I won't comment on your sartorial choices when you ask those questions. Okay, it's a safe space. So that is it's honestly a safe space. That definitely won't be what happens. Right, so that is the plan for this morning. Emily, Sophie even, what is in... Sorry, Sophie, what is in your report?
All right. So this is working. Thanks, Torsten. First of all, a big thank you to my many colleagues at Resolution Foundation for their input into this report. And what we were looking at in this report, as Torsten said, is kind of how has exposure to trade in the UK changed over kind of a longer period, and what does that mean for where we should be kind of worried about international trade shocks.
What does it mean for tech shocks?
There we go.
Oh my
God. When most people think about who is most exposed to international trade, it does tend to be manufacturing workers that come to mind. And that's because these were the workers that have been most visibly harmed by international trade in our kind of recent past by arguably the kind of China shock or this kind of big import exposure that happened in the early 2000s. And this has at least been partially responsible for the kind of backlash against globalisation that we've seen subsequently. And here's our kind of spokesperson for that backlash against globalisation. But Trump was, is particularly kind of focused on this. This is his own title, I am a tariff man. But he was, had a strong view that you needed to kind of protect those manufacturing jobs and was really focused on that as being the kind of major exposure of international trade. And he's not alone in having this sort of manufacturing-centric view of the risks of international trade and how trade affects the economy. But what we're trying to ask in this report is, does that kind of still best serve the UK to be thinking about it in primarily those terms? So when we look at what's happened over the last 2 decades, we see that there has been a sharp decline in manufacturing employment, in particular for those workers who are at or above median pay, where you see a particularly big shift in employment out of manufacturing. And so what this means is that this type of kind of exposure to this type of shock clearly has fallen over the last 2 decades. And what we see here is that those on medium pay, the share of manufacturing employment fell by a third between 2000 and 2009 and was halved by 2022. Certain sectors that were particularly exposed to the China shock, the kind of low value added manufacturing, for example, manufacture of leather and wearing apparel, fell by even more, by 80 to 90% of those jobs have now disappeared from the UK. And so if what that means is that the kind of traditional exposure to international trade through manufacturing jobs is down, we probably need to have a think again about the nature of how our trade exposure has changed. And there's sort of 3 things that we need to be thinking about in that context. So first of all, globalisation has happened, and we'll kind of go through that and what that means. But also that it's increasingly about exports and not just our import exposure. We're just mainly thinking about kind of manufacturing from a kind of import penetration perspective. So what about the kind of export story? And finally, it's about we need to be thinking beyond just the kind of production side and about the impact on our jobs, and also think about how we are exposed to trade as consumers. So I'll take those in turn. So starting first with the globalisation has happened. Higher openness essentially means that our exposure has changed but not fallen. But turning first here, what I've showed you before was that manufacturing employment has fallen, and this shift from employment in kind of traditionally high trade exposed sectors like manufacturing towards traditionally less exposed sectors like services has pushed down the average tradability of jobs. And by kind of tradability here, we're looking at kind of total trade, so exports and imports as a share of kind of the total supply or total demand in sectors, and then kind of weighted by where workers are employed. But as you can see here, across the pay distribution, exposure was pushed down by these shifts between sectors, slightly more for higher paid workers, because as we showed you before, they saw the biggest decreases in manufacturing employment. But these shifts have been offset or perhaps even outweighed in some cases by what's happened, which is the general kind of increase in openness. So on average, sectors have become more exposed to international trade. And this has basically been happening despite the stories of sort of slowing international trade, so slowbalisation, but also despite the fact that we've had Brexit, which has reduced trade openness in the past few years. But when we take a longer term view and when we think about the kind of 20 years picture, the UK is a lot more open to trade, and that's left our sectors a lot more exposed. So total trade has increased from 53% of GDP in 2000 to 65% in 2019. And when we put those two together, we see this kind of pattern where ultimately for most workers there's actually been relatively little change in the sort of overall average level of trade exposure. The exception to that is for our highest paid workers, where they have seen trade exposure increasing. And that's despite the fact that these were the workers, as we showed earlier, that have had kind of some of the largest shifts out of manufacturing employment. And the reason is that they've been moving into sectors which have been becoming even more exposed to international trade, or have seen bigger increases in the exposure of international trade, which we'll come on to in a second. But if we look at the 90th decile, so the decile around the 90th percentile of paid workers, they've become 18% more exposed to international trade between 2000 and 2019. So the second thing that we said we need to think about is the fact that this is about exports and not just imports. So we already mentioned that sectors on average have become more exposed. And if you look at the kind of left-hand side, you can see most industries did become more exposed to international trade between 2000 and 2019. So they were kind of shifting outwards. While declining manufacturing was becoming more import intensive, our professional services sectors, which you can see here, were actually becoming more export oriented. So when we kind of like break this down and we look at in a bit more detail at what's happening to these sectors, we see that there are, a larger number of sectors in the economy are now kind of exposed to exports. It's increased from increased from 15 sectors of the economy to 22 sectors of the economies, which are now kind of highly export exposed over this period. And when we put that together, what we see is that across the pay distribution, workers have become more exposed to trade through export. So that's the blue bars. Across all of them, that export exposure has increased. For most workers, particularly around in the middle, that has been offset by a reduction in the import exposure of their jobs. So that's essentially what's coming from them kind of moving out of the highly import exposed manufacturing sectors. But for highest paid workers, where that increase in export exposure is actually the largest, and we know that they have become more trade exposed, is accounting for 3/4 of the increase in trade exposure for those workers is coming from the export side. So the third big change that we said we need to be thinking about, and when we kind of refresh our thinking about international trade exposure, is thinking more about Britain as consumers rather than just as workers. And what we see here, we've talked about the fact that openness increased over this period. The green line is looking specifically at openness in terms of imports, so imports as a share of GDP. And you can see as that increased in the green line, we also see the import intensity of consumption increasing in the blue line, which is shown in the blue line. And the value in 2000, the total about 25% of the value of what we consumed came from imports. By 2019, it was around a third of it that came from imports. So it was kind of, we did see this big increase in our exposure internationally through what we consume and the kind of goods and services that we consume as consumers. Right, and when we then break this down to look at how this varies across the income distribution, what we see here is that those on higher income consumers are on average more exposed to imports, and the level is higher. And what we also see is that between 2000 and 2019, the change was larger for them as well. So that gap is actually increasing between low and higher income households. But ultimately what's driving this is almost entirely increased housing costs for lower income workers. So when we take out rent payments, you see that both in terms of the levels and in terms of the change between 2000 and 2019, the pattern looks a lot more similar across the income distribution. So that basically might leave us to think that it's high income workers that are a lot more exposed to these kind of trade shocks on the consumption side. But actually there's two reasons to believe that it might be lower income consumers that are more highly exposed to volatile import prices, and we'll go through them now. So the first is that of their kind of imported consumption, lower income households are much more heavily weighted, have consumption that's much more heavily weighted to more volatile essential spending items. So global fuel prices are particularly volatile. I mean, we've seen that in recent years with kind of energy price spikes that we've lived through in 2022. And they've also accounted for many of our largest kind of terms of trade shocks over the last half a century. Energy kind of related consumption items account for many of the most volatile items in our consumption basket. But they also the volatility in fuel prices also feeds through into another area of essential spending, which is food. When we put these two together, what we see is that for lower income households, over a third of their imported consumption is coming from these food and fuel consumption, whereas it's around a quarter for our highest income consumers. Because it's essential spending, it's also more difficult to substitute away from it when you have these big price shocks. So this is the first reason why we might think that lower income households actually are more exposed, despite what we showed you before. The second reason, this one's a little bit more complicated, so stay with me, but what that looked at was just the difference between what we consume, between products, and what also matters is within products, what varieties different income households are consuming. And different and low-income households are more likely to consume the sort of cheaper varieties, so your sort of own brand products versus your kind of Heinz baked beans is one way to think about it. And what we looked at, when we looked at this in detail, what we found was that the price distribution at the lower end, so the difference between kind of the lowest price products and the medium price products, shrinks following a terms of trade shock. Ultimately, what that means is that cheaper varieties were changing in price by more than average or more expensive varieties. And so this chart is showing you the kind of cumulative response to that price variation at the bottom end of the price distribution following a terms of trade shock. And this is specifically a terms of trade shock that's around the size of the terms of trade shock that we saw after Brexit or after the Euro debt crisis. And it does substantially reduce that kind of price variation. It has a significant impact on highly traded goods at the lower end of the distribution. There's no significant impact at the upper end of the distribution, and there's no significant impact for low import intensive goods. So it is specifically through this kind of channel that we're seeing this happen. And so lower income consumers are more exposed to these kind of more price sensitive imports than our initial analysis suggested, which doesn't allow you to look at the varieties within products that they consume. So where does this kind of leave us after we take into account those kind of three big trends in how exposure has changed? Well, manufacturing workers have sort of remained the focal point of what we think about when we think about the perceived risks from international trade. In particular, the fear of a kind of second China shock coming and wiping out our manufacturing. But ultimately, what we've seen is that our employment in manufacturing has fallen a lot. And so our exposure to this type of shock coming again is a lot lower than it was even in the early 2000s. Ultimately, we could have different types of import shocks, but this kind of focus on this sort of import shock has definitely kind of fallen. What has been much more overlooked and has had a lot less attention given to it is the risks that are posed by two different types of shocks. So import prices, where we've seen consumption becoming increasingly important as a form of international trade exposure, and global demand shocks. Interestingly, those are the two shocks that we've actually lived through most recently. So if we think over the last 5 years, we had COVID, which was a massive global demand shock, which affected our services, demand for our services sectors and our exports substantially, particularly certain service sectors which relied on physical travel, like tourism. And obviously, we've seen the energy price crisis in recent years, which was a huge kind of import price shock. And so what does this mean overall? Well, as we said, we need to refresh our thinking about where our exposure to trade now lies. And we need to think about this both in terms of the jobs that we do, but also in terms of what we consume. Workers across a lot more sectors of the economy are now exposed to exports. And especially that's been focused in kind of our higher paid workers. But we're also more exposed as consumers. And so we need to be thinking about both sides. And ultimately, this means that our exposure has changed, but it means that the biggest threat to workers and consumers from international trade could actually come from sort of turning off the taps of global trade, as opposed to necessarily the kind of unleashing of globalisation. Great.
Thank you very much, Sophie. That was a lot of techie charts. Everyone, you've done very well. Right, apart from anything else, if you take one thing from today, hopefully you'll take many things due to being very capable people, but is that lots of the last few years we've been talking about trade openness just going backwards, because all we've talked about is Brexit. And what we're trying to do here is encourage you to think about the last 25 years, where even taking into account Brexit, trade openness is up, and also the nature of our jobs and what we consume has changed, and put all that together, and then you get what Sophie is telling us about. Now we're going to hear from Vince, who was a trade economist before we were all obsessed with it. Over to you, Vince.
Well, thanks. I'll just say a few general contextual comments, then something on Sophie's excellent paper, and then at the end, her kind of forward-looking, what conclusions we draw about policy in relation to trade and trade shocks. First, the general context, a sort of cross-section of countries. Britain is actually boringly normal. I mean, if you look at the share of trade in GDP, export plus imports, goods and services over GDP, Britain is about 70%, which is not surprising. I mean, you know, you have these highly trade-dependent economies, the Singapores, it's 300%. If you've got big continental economies with an internal market, China, United States, particularly the United States, India, it's down, you know, 25 to 40, something of that order of magnitude. Small European countries, about 100%. Even Germany, actually, and that, you know, reflects the intensity of the internal market of the European Union. But Britain is boringly normal. Secondly, something about time trends. I rather question this assumption about, you know, relentless globalization and growing trade interdependence. It's certainly true if you look at the post-war trend for the world. You have this, you know, fairly steady line going upwards of growing trade to GDP, but it actually stops in 2008, and the following decade trade to GDP actually fell. We have this very abnormal period around the pandemic and a sudden surge in 22, but actually the globalization process was in serious trouble in the last decade globally. That wasn't true of the UK. The UK was a bit of an outlier in this respect, but if you look back over the long term at the UK, what I found rather surprising was that the level of trade exposure of the UK hasn't really changed over the last 50 years, big variations. And if you were wanting to do a sort of time series regression or something, I mean, the independent variable that you would be using, I think, and which would explain most of this, is the real effective exchange rate. You know, we had a surge in the early 80s, the Thatcher era, when the exchange rate was used as a macroeconomic policy tool and had a significant effect on the tradable sector. It similarly happened in the early part of New Labour, not for policy choice, except that one of the consequences of an independent monetary policy is that we couldn't use the exchange rate. And if you then took the real effective exchange rate and lagged it, I think you would probably find this explains most of what's happened in the post-war era for the UK, at least after the 1970s. So we have a somewhat different story. I suspect one of the things that wouldn't show up in your 50-year time series is China. China's relatively, I mean, if you define China more widely to include Korea and Taiwan, then I guess you'd get a slightly different story. But China only really emerged this century as a major player in international trade. And I worry that we're probably attaching too much importance to it. I mean, Sophie did quote what I think seems to be a very good UK study that does pick up a China phenomenon. But most of the arguments about China come from this big seminal work in the United States, Otto, Dorn and Hansen, which showed that there was a correlation between Chinese import penetration and wage levels and growth, I think, and also unemployment levels, and also Trump voting patterns. But those studies have been criticized, and there are others in the United States which tend to show that the China impact has actually been very positive for the United States. So just in passing. Just a few comments on Sophie's paper. I think it was she does make this very helpful distinction between the terms of which we think we do need to emphasize, between the terms of trade impact and the trade adjustment impact. They're quite different. I mean, if we're talking about a big oil shock, there is an adjustment effect if you're thinking about Aberdeen. But by and large, it's an indirect tax on the British economy. It sort of pushes up costs, pulls out demand. So what we call the cost of living crisis. But that's quite different in its impact from most of the kind of sectoral trade adjustment impacts that we've had. And of course calls for a different kind of policy response. I think the second point about the paper, which again was, I think, a very helpful insight, is that when we're thinking about trade impacts and exposure, we need to think about services as well as manufacturers. That's quite an important insight. And I think I was just reflecting on some of the services sectors which have had a trade exposure and how they've responded to it. I was rather struck by the fact that we used to have quite a big call centre industry, which of course largely disappeared with Indian competition. I don't recall in my 20 years as an MP anybody ever standing up and saying we've got to save our call centre industry. It just sort of quietly disappeared. Though you could argue that it's as much to do with critical communications as all those Huawei masks that they're having to be ripped out because they're a threat to our national security. But the call centre industry just disappeared, which is a fairly common phenomenon. If you have flexible labour markets, people just adjust and do something else. And the contrast in another service sector is what happens with tourism. In the 70s and 80s, we imported cheap sunshine from the Mediterranean in the form of package tourism, which had a very significant effect on the British economy. And what's left behind is Blackpool, Skegness and Margate, left behind areas where there has been a major trade adjustment issue. So within the services sector, as within manufacturers, you have this rather differential trade adjustment impact. I mean, if we look at manufacturers, I did a lot of studies, as was mentioned, in the 70s and 80s, looking at textiles, Sheffield cutlery, shoes, and most of those industries just sort of quietly disappeared because there was actually a very rapid turnover in the labour market. Most of the workers were semi-skilled women, and they were just absorbed, and there was very little legacy. But the contrast with shipbuilding, steel, where we're still living with the effects on some of those towns is very striking. So the services manufacturing point, I think, is rather important. And I think the third point on Sophie's paper is, which I think she's quite right to emphasise, is how much of the changes we're seeing are due to final consumption. We were talking before the meeting about one case I remember, which is the Dundee jute industry, which is, I think, the first post-war trade policy debate we had when Harold Macmillan was being pursued to introduce import quotas on competition from India. But actually the problem...
Vince, remind everyone what jute is, because the youth watching at home, I know you all know what jute is. Tell everyone at home what we're talking about, what was being made in Dundee.
Well, these are these jute fibres from the Indian subcontinent, which make these, if you go to environmentally friendly shops, you get these nice bags of...
If you live in a hippie bit of Britain, you get a jute bag when you go to the hippie shop.
Yeah, that's right. But they were driven out not so much by Indian competition as by plastic bags. Consumption matters, and it's fundamental. But the point I would add that we need to think, I think, not so much about final consumption as intermediate consumption, because it was what's happening in international trade is a lot of intra-industry as well as inter-industry trade. When we export minis, we're also importing German engines, whatever is we use in Oxford. When we import Airbuses, we're not just importing from France, we're exporting British wings. This intra-industry effect is massively important. And of course, I promised myself I wasn't going to talk about Brexit, but one of the significant factors of the European Union was the customs union, which has promoted a lot of this very intense intra-industry trade, and that's how the consumption effects often work. I'll just finally say a couple of things about policy, and particularly how do we operate trade policy in such a way as to make adjustment easier, given that we're a relatively open economy and we assume we're going to remain that way. When we talk about export exposure or import exposure, we're essentially talking about our old friend comparative advantage. And when I tried to restart industrial policy in the coalition government in the 2011-12, the first exercise we did was to look at revealed comparative advantage as a way of defining the sectors that we wish to concentrate on. And we did, as I think sure Sophie would have approved, we had several services sector. We had creative industries, and we also had professional services. And these were sort of sector bodies alongside the aerospace industry, the biotech industry, the car industry, which we felt that we should be promoting through this industry policy collaboration of government and the private sector. The problem with sector policy, I mean, you can do a lot of good horizontal policies, improving labour markets. The problem with a lot of these sector policies is actually what level of aggregation you want to apply. I mean, if we take a sector like tourism, there is a lot of clamour within the tourism industry, for example, to have VAT exemptions. This is needs sector support. But then this may be helpful in Margate, but do you really want to subsidise London, Edinburgh, Cambridge and all the other major tourist centres? But then you narrow it down to the coastal towns. But do you really want to help Brighton and Bournemouth, which have Premier League football teams and are highly thriving communities? So these adjustment issues at a sector level are very, very highly specific and place specific. And the kind of thing that actually government isn't terribly good at. My view, there is a role for active sector policies in an industrial strategy, and I think we did a reasonably good job of doing that. What you're trying to do, I think, is make the industries you're focusing on essentially more price inelastic, so they're not subject to China shocks or the equivalent, trying to make your cars or your aeroplanes more like Swiss watches, which are sort of independent of trade shocks and exchange rate changes for that matter. I'm sure we'll come back to that in more detail, but I think the second point and the concluding point I'd make in conclusion is, can we see any big trade shocks coming over the horizon? And the answer is yes, there's a very big one. You can see the tsunami on the horizon, which is, although I minimized the China shock earlier, we are now in a very difficult position where the Chinese level of consumer demand is very depressed for a mixture of reasons, political and economic. Vast excess capacity in a lot of very highly competitive Chinese industries, and we, the European Union, the United States, are going to be hit by very large volumes of electric vehicles, solar panels, turbines, but also other things, semiconductors, many others. And there is going to be a real dilemma here. How do you deal with this? It's not classic dumping, because actually Chinese prices are higher in foreign markets or here than they are in China. So it's not dumping, but it's very highly competitive, potentially poses very difficult adjustment issues. There is a real danger that hyper-nationalists sort of jump on this. If Mr. Trump gets back, one of the first hires will be a man called Peter Navarro, who is currently in prison, but a sort of trade economist who jumped on the anti-China bandwagon and will demand, trade warfare with China. So this is potentially coming down the track, and I think we do need to think about how Britain would respond to that. We're no longer in the European Union. How does Britain respond? Do we just take the hit on the chin? Do we copy what the European Union are doing? Temporary protectionism, I think, is probably what will happen. Or do we just passively adjust? Real policy dilemma here. I don't know that there are simple answers to it, but I will finish up with a chart I used to use when I was in Shell Group planning, which I haven't shown it on the screen, but this is a sort of cobweb. Sorry, you probably can't see it.
Describe this in a lot of detail, Vince.
It's a wonderful cobweb about what happened into world trade between 1929 and 1933, and you start here and it goes round and round, falling month by month by month, until the value of trade relative to gold was actually a third of the original value. And that was partly collapsing commodity prices, but it was also trade warfare. And, you know, we could be back there again fairly soon.
Well, that's a perky place to finish. Right, thanks for that. Thank you very much indeed, Vince. I thought that was overall going to be really perky, and then we got criminals coming back to the White House, and trade is going to collapse around the world like it did in the 30s. Right, Emily, I hope you're going to be perkier than that. Over to you.
I'm going to try. I'll do my best. I'm not sure I'm going to win. Thank you for having me here, and congratulations, Sophie. It's a really thought-provoking and important report, I think. We often shy away from the downsides of trade and the trade shocks. We always talk about the gains from trade. I think it's quite important to update both our understanding of trade shocks, and you really help us with that. But I'm also a professor of public policy, so I'm going to talk quite a lot about the policy implications. So I'm going to make a few comments about what I think are the nature of the trade shocks and actually complement some of what I think Vince has just said, and then focus on the policy questions. So I think you're right. I think when we think about trade shocks, we think about the old style, the loss of jobs in cars, in manufacturing, the hollowing out of the Rust Belt, and all the communities that lost out and are still struggling with the closure of old style manufacturing. But as you point out, manufacturing is a relatively low percentage of UK employment now. So we've seen this big sectoral shift into services and into tradable services. And that's the big shift. And this is a global shift as well. So I'm going to just refer to Richard Baldwin's work here, which is really helpful. And what he's shown us is over the last 20 or 30 years, with information communication technologies taking off, what was really hard to trade was services. And as over time, they've become easier and easier to trade. So we've seen the unbundling of services supply chains. And we've seen that accelerate with digitalization. So if you can think about telehealth, right? If you wanted health, you really needed to go in person to the hospital. We're now able, for example, if you're being scanned at midnight in Oxford, you go for an MRI scan, it might well be somebody sitting in Australia in the daytime there who's interpreting, analysing that scan and sending the information back to Oxford, right? So services has become much more tradable, many segments of services, because of this information communication technology revolution, and it's accelerating particularly because of digitalization. So while we've seen, and absolutely we have seen this slowdown at the aggregate level in terms of trade to GDP globally, the segment that's growing is the services economy, particularly digitally delivered services. And actually so in one sense, that's a really good news for the UK. Tradable services now make up 45% of our economy, employ about 30% of our workforce. So this tradable sector has become the sort of the growth sector. Our services trade now, the latest state data is that we think about 75% of our services exports are now digitally delivered. Okay, so we're doing services, we're very much integrated, they're very much highly integrated into global supply chains, and trade exposure. The jobs that are most exposed to trade, as you beautifully point out, are these services jobs. So all well and good. I think the bit that we need to think quite carefully about is we're drawing more and more of the UK population into those highly traded services sectors. Yes, it's the high-end professionals who are most exposed, but actually lower and middle income households are also being pulled into those tradable services sectors. More and more people are working in those segments. And while their level of trade exposure might not be quite as high, their vulnerability, their ability to adapt to those type of shocks is that they're sort of less well placed. And that matters. And going back to Richard Baldwin's work, what he's saying is that, look, if we look at which bits of services trade are growing most rapidly, it's in intermediate services. So business to business services. So you might be an architect sitting in London, and you might basically outsource part of the job to somebody sitting in India. You might say, okay, could you design for me my website? Or can you manage my HR? So we're seeing a lot more unbundling of services, but also the relocation of a lot of those intermediate services to emerging economies. So that's great for the growth of emerging economies. So the segments of the services sectors that are growing fastest are those services in emerging economies. So at the moment, if you look at the aggregate level, the US and the UK are really leading in services, the second largest exporter of services globally. But the bits that are catching up are emerging markets. And what that means, and this is where I think, and I haven't seen good data, but this is where I think we need to keep our eye on, is the possibility that a lot of the people that are being drawn into the tradable services sector, who are sitting in low and middle income households, are the ones that are going to be potentially impacted as those bits of services are then outsourced. So I do wonder whether we're not only going to see the sort of trade shock coming from electric vehicles from China. Bigger concern for me is that we're going to see the displacement of jobs in the sort of middle bracket of services to emerging economies. So I think we do need to really watch out for that. And then I think that your papers are also really helpful in drawing attention to these consumption-based, the sort of price, the import side of things, and the fact that lower income households are particularly precarious when it comes to managing and absorbing, adapting to shocks, for example, in the essentials like food and fuel. So huge thanks for drawing our attention to it, and just to put on the table this question of whether we've got a trade shock coming down that's going to hit us in the services, that middle part of the services sector. So does this all matter? I think, Vince, there you mentioned the fact that in the past, services sectors have just quietly died, right? Call centres have quietly moved abroad, people have quietly adjusted. And yes, they have, but I think we've also got to be thinking quite carefully about the ability of people to adapt and to move and to be able to manage these trade shocks. And actually, historically, we've done pretty badly on that measure. So we've sort of not managed to cater for people that are affected by trade shocks. And you can see that historically. You can see the fact that our old-fashioned manufacturing areas that have seen job losses are often still the ones that are sort of left behind. So we've got a spatial inequality that is partly the result of our past failure to really address and support communities to manage trade shocks. So I want to try and make the case for, from a policy perspective, doing much more to support communities to adapt to trade shocks, which I do think will keep coming. So firstly, and perhaps one of the main reasons to do this is sort of social justice, right? To address inequality, and just from a moral perspective. Because as we know, the more you're exposed to trade, classically, it's those stronger sectors of the economy that win and gain. It's the weaker sectors of the economy that tend to lose. So there's always been a very strong moral argument for cushioning those who lose out. And I think particularly at the moment, if we're looking at the fact that we've got these sort of temporary, we hope, shocks on the consumption side in fuel and food, we've got households at the moment that are really precarious, right? We've got very low levels of savings, very low levels of resilience among the low-income households. They're particularly vulnerable to these type of price shocks. So a very modest change in the price of, if you like, baked beans or your daily consumption basket can actually tip households from sort of just about managing into absolutely not managing. So there's a real vulnerability there. But even if you put the ethical and kind of moral obligations aside, there's a very strong, I think, social political argument for addressing trade shocks. And this is an old-style argument that goes back to seminal work by John Ruggie in the 1980s. And what he said was, if you want to maintain an open economy, you absolutely need to address the losers, if you like, those who are struggling with the trade shocks and managing them. And the point out that he was saying there was more actually the political project. To sustain an open economy, you need to be doing the redistribution, else the politics unravels. You get the populist backlash against trade. So actually, from a political viability of the open economy model, you need to be thinking about supporting communities to manage those supply side or those trade shocks. And I think it's interesting that how few governments have really managed to do that. And I think the European style, it's continental Europe, if you look at sort of France, Germany, Denmark, have done better, and I'm going to come back to that point. But even if you put aside all of the ethical arguments and all of the political arguments, there's a very good economic argument, I think, for supporting households to really be much more resilient in the face of a trade shock. And And the point here is that trade, and I think the global economy, is ever in momentum, right? It's ever changing. And our ability to derive benefits from that means staying at the head of the curve, right? We need a productive labour force. We need the innovation. We need to be right at that cutting edge. And we need to be pulling more and more people and supporting them to be productive in those new sectors that are opening up. And here the point that I want to make is that when households are only just managing and they're really struggling to get along, they're often not in a position then to invest in that upskilling. And so what happens is our failure to support households to manage and be resilient in the face of trade shocks actually acts as a drag on productivity. I hope that makes sense. To land that point, and the example, it often gets used, but I think it's a useful one, is Denmark's flexicurity approach. So, and I know there's a Good Resolution Foundation.
There's always a Good Resolution Foundation report.
I loved it.
Whatever
I went to look for the... Yeah, I went to look up the latest data I could find, and your report popped up. But it's a really interesting model, because what the Danish model has done is, and it's not perfect, and we can go in the discussion perhaps some of the downsides of the model, but I think what they've done is managed to have a very flexible approach to labour markets. So they've got a similar level of flexibility from a firm's point of view to the UK. But the radical difference is that they both provide a much more effective social security net, and they provide much more active labour market policies, which means that if you're out of a job, you've got more of a safety net. And what that means is then people they're able to look and have the security to look for new jobs, knowing that, okay, if I give this job up, I retrain, I'm okay. I've got something. Somebody's got my back, right? So you've got that social security network, and they're also they're putting a huge amount more than we do into then training people to be in a position to adapt. And just the numbers on that, as we don't have great recent data as far as I can tell, but the recent sort of 5 years ago, we were putting 0.3% of our GDP into those type of active labour market policies. Denmark was putting 2% in, right? So that's a huge, huge difference. So all to say, therefore, I think if we want to we've got a productivity problem in the UK, we've got a serious skills problem, and we've got a massive problem of inequality. And the point I want to make to you is, as we're buffeted by more and more trade shocks, actually supporting the lower and middle income households to then address them can actually help us out, not only from a kind of addressing inequality and a social cohesion point of view, but actually I think it will serve us well in terms of staying at the edge of the global economy and being right there to then seize the opportunities that arise from trade.
Great.
So thank you.
Thank you very much, Emily. It's always upsetting to sit here as a kind of pretend Swede hearing Denmark praised. But you know, we've all got our cross to bear. This one can just go on the list. Right. Okay. We've got a lot to get through. We've got about half an hour, and we're going to talk about the future of global trade. So let's start at the history. So I thought we should start on the old problems and just get your assessment of whether we should, the ones that used to dominate trade discussions, or still do, but maybe they shouldn't, and decide how much we should still care about them. So let's start where it all began, with the farmers. So historically, let's do 19th century trade disputes, except for kind of us trying to force open some markets around the world. A lot of it is basically food. That's what we're arguing about. Lots of British politics is falling out over food, trade policy around food. The Liberal Party in those days is their defining mission in lots of ways. So one of the weird things about British politics in the last 20 years is, like, when I was a youth, the Conservative Party was the Farmers' Party. Right, but we actually look at actual policy decisions in the recent past. It's very confusing about what we're actually trying to achieve. Do we want the cheap food for the consumers, or do we want the domestically produced food, either because we believe in food security, if there's going to be another war, whatever it is, or because we like the farmers? So Vince, what has happened to the politics of farmers? Does it matter anymore? Is this issue kind of 1850s, not 2050s?
Well, I'm very struck by the very sophisticated way that the National Farmers Union now present their case. It's a very different...
This is Manette Batters.
Manette Batters.
For any lobbyists, you should just watch her and copy her.
It's brilliant.
She's a very impressive woman.
Brilliant communicator, great understanding of the technical issues. I mean, I make a sort of... Well, first of all, I've got a bit of a declaration of interest. As it happens, my wife is a small-scale farmer. but abandoned livestock farming for the easier route of horticulture.
She's been trade shocked.
Trade shocked, yeah. But no, I make a distinction between sort of marginal farming, and I know it's much more complex, but marginal farming, hill farming, where there is a public good involved, you could argue, landscape management, conservation in general, and where there is a justification for a substantial subsidy, directly or indirectly. I have more doubt about whether it's justified to have effective subsidisation of arable farming in large-scale arable farming in East Anglia. Why do we do it? Particularly things like sugar. You can import from cane-producing countries at lower cost and developmental benefit. So I would differentiate within the farming sector.
So you're basically a proper liberal when it comes to...
Yeah, I think so. Yeah.
Very good. That will shock everybody. Emily, what do you reckon? Do you think... So the current policy, what's interesting is, so in general, British public policy doesn't spend a lot of time thinking about agriculture these days. But in trade policy, it is making a difference in the short term. So Canada, cheddar cheese is the current... we're probably not going to get a Canadian trade deal in the nearest future because of the disagreements on this. So... Is this because the farmers are actually more powerful than we think politically, or are we just going to wait a bit till we're after an election and then sell the cheddar cheese down the river?
So it's interesting, right? We had the same debate with Australia and New Zealand and their free trade agreements there, and tariff liberalisation, displacing...
Although a weird lack of the discussion prior to the deal being done, and then everybody being like, excuse me?
Panicking after.
Excuse me? Yeah.
But also I think there we saw a bit of a split actually between DEFRA, if we can read out the politics at the cabinet level, between DEFRA and the Department for Trade as it was then. And I think actually that speaks to a wider problem of our trade policy at the moment, is that we're not all singing from the same hymn sheet. So I think one of my top line messages would be, let's have coherence across the board.
But are we going to sell out the farmers in future? Just to push you a bit on. So we should definitely be coherent, but are we going to keep selling out the farmers?
So I don't think they've necessarily got the political clout in terms of numbers, but I think we get it. We understand the fact that if you reduce tariffs and you've got cheaper New Zealand lamb coming in, we're going to displace the Welsh hill farmers. So I think people understand the trade displacement story in agriculture more than they do, for example, in services. It's more visible.
Do you think the public care?
Yeah, I think the public care, I think on that story, I think we've got traction in the media narrative. But actually, and this is the bit I want to add 2 points to what you and Vincent have just mentioned, biodiversity and just the future of the countryside, I think is a really salient public policy issue. But also food standards. Right, if anything's going to sink the US, a deal with the US, if the US shifts, and there's going to be a lot of shifts in the US, right, food standard is going to keep coming up, and it will. And there's a concern. British consumers do care about the quality of food, the ethics of food, etc., and more so. So I think those are the bits that are becoming more politically salient.
Okay, let's do. That's farmers done. That's all we've got time for. Right, let's do deindustrialisation. So that, as Sophie started out by saying, is the bit of this that got all the attention over most of the last 20 years, not least because we've lived through some pretty large changes before that. One of my favourite charts, you mentioned this earlier, but on the shoe manufacturing, which I think is called leather goods manufacturing in the ONS tables, the decline in the workforce, even as late as the late 90s into the very early, it's just incredibly precipitous. It's basically like 75% of it goes within I think it might even be as short as a decade, because basically the last remaining old workers disappear, basically, who have clung on around Northamptonshire. And the rest. So you do see these very large changes coming through, but then you gave us an example from, we were discussing earlier, but I think the Dundee jute manufacturing decline starts straight after the First World War. So even though deindustrialisation at a macro level isn't coming through the figures until the 70s, in some places, textiles or jute, it's going on far, far earlier. So, Sophie, should we think about this as basically, is that problem done? And is it done because, as in the employment effects of the deindustrialisation, obviously lots of other things are going on, or is it something that can restart because we're now at you had 9-10% of the workforce left working in manufacturing. Are we done, or have we got more to come?
So I think, to come back to what Vince mentioned earlier in terms of what's happening to globalisation, we're not seeing goods trade keep increasing as a share of kind of global GDP anymore, and we are seeing it sort of continue on the services side, and that might suggest that maybe you're not going to see this kind of big expansion in kind of manufacturing happening again. I think really what it suggests is that if you do see that, it's kind of coming from somewhere else. And because the UK is not the big player in manufacturing anymore, it probably means a big manufacturing shock, a big kind of manufacturing expansion in one country. I don't know, if India is big enough, it's got the scale, if it suddenly became a massive player in manufacturing, it's not really the UK that's going to be like most hard hit by that. It's probably China and
Vietnam.
The countries that are already doing it, and the countries that are already producing the goods that we import, because they're just much more likely to be kind of competing in a kind of like for like fashion. So I think UK workers will, there's obviously going to be some exposure, but I don't think it's going to be the big shock. And I think Emily's kind of talked about where some of those big shocks might be in future.
There are manufacturing shocks coming through the system. South Wales is the obvious one, and Scunthorpe. And the car industry, which actually had a big revival 10, 15 years ago, is now in relative decline. We still have 500,000 people directly and indirectly involved. And so the EV China issue is going to be a big one for the UK. I just make one. The real problem with manufacturing are these sort of lumpy, localized problems. I mean, just to take a little anecdote, Swan Hunter was closing its yard, I think about 20 years ago. And there was a big national cry, they've got to protect the shipbuilding industry. And I fielded the debate from my side and I discovered that there are actually more people employed in the Twickenham shipbuilding industry than there were in Swan Hunter, because we had, making and repairing leisure berths, but we also had a cluster of maritime computer companies that were doing all the design work for Korea. And, actually quite a substantial sector here. So that's not to minimise the problem in Newcastle. You've got a group of middle-aged men, late middle-aged men with very specific but real skills who are basically just being cast aside as nothing. They're never going to re-enter the labour market.
On the trade versus tech argument, so in the end, Vince, why don't you give us your take on this? On how much, on the job side of deindustrialisation, how much is really the issue trade and how much is it just everyone likes productivity growth means fewer workers in manufacturing, it's technology, not trade, doing the work?
Well, all the studies that were done in the 70s and 80s, we're now getting much more effective dynamic models and so on, but the earlier work also always suggested that the trade effect was exaggerated, that most of the jobs would have been lost in any event because of technological change. That's true, for example, Lancashire Textiles was a good example. Certainly in the weaving bit of the supply chain, labour-intensive weaving was disappearing. You were getting Carrington, Vayella, and the rest of them doing, synthetic fibres, very highly capital-intensive. This was, you could argue that trade spurred that, but actually it was technology that was driving the job losses.
Yes, go.
The interesting thing, and I did say I wasn't going to talk much about Brexit, but on manufacturing and cars and supply chains there, what we're seeing is globally, manufacturing supply chains sort of relocalize as you've got proximity to customers becomes more and more important. So regional markets really matter. And actually there, I think for the future of some of our manufacturing sectors, the relationship with Europe is going to be really important. So we've got a kind of self-imposed trade shock basically on that's hit some of our manufacturing sectors rather than an automation
for industries
shock.
with large scale basically.
Well, they're dependent on European supply chains. They're really integrated into those European supply chains. So I think that's something that we can work on. But the bigger point on the manufacturing sector is just that ability to stay at the cutting edge, right? So I think here the industrial policy is going to really matter. I just wanted to pick up on your point earlier about electric vehicles, etc. Which sectors we choose to now support, and giving sectors, and including the car industry, enough of a time horizon and certainty. So I think our industrial policy has been flip-flopping, and that's not helping provide any certainty or any future, but also I think we've got to be very careful and smart about how we do that industrial policy.
Yeah, there's also a just-in-time phenomenon. We're seeing with the disruption of supply routes that there are real economic advantages in producing close to your consumers. And we've got a bit of a revival happening in garments and Yorkshire worsteds, for example, based on a just-in-time phenomenon.
Yeah, that's why you should always, even if you take globalisation on the good side to its extremes, you probably always have some domestic production because people do want some stuff quicklish. Ready meals are harder to ship. I'm joking, but look at what manufacturing is actually growing. Food manufacturing. That is what is going on. Stop eating your ready meals, people. Right now, from there to Trump. So let's do the first question from online, Edward's question. So one of the weird things is, and so Vince gave you all the figures for levels of trade openness, right? And the US is the one that stands out amongst advanced economies for not being very open due to being very large, broadly. But one of the puzzles is the country that's the least open to trade, because it's a continent rather than a small island, is the one where trade politics is a much bigger deal. Now, I'm hoping that all the politicians are paying lots of attention today, but trade politics outside of Brexit, obviously, isn't a big part of British politics and hasn't really been since the 70s and 80s, whereas in the US it's a very large part of the... So why is that? Why is US politics trade-focused and we, despite being much more open, aren't? Vince, any ideas?
Well, I guess one factor is that self-sufficiency is a realisable objective in the United States, whereas for us it's
madness.
Complete madness and unobtainable. So if you start with the psychology, you can produce everything. Any threat to that is potentially problematic.
Maybe.
And I think the other factor is that it goes back to your point about services. I mean, the people who used to lobby hardest for trade openness in the United States, Wall Street,
yes,
and particularly in relation to China. And nobody wants to hear from Wall Street.
Yeah, that's exactly right. On so Sophie, here's a conundrum for you on this front. Okay, there on this, what happens when the doubt. So let's say Trump becomes president. I know it's going to make everyone stressed, but just keep your heart palpitations under control until November. So and we get some form of trade war with China, and it is inevitably a goods-focused trade war, because that's where the politics mainly is, because nobody cares about Wall Street, like you say. Particularly, so maybe that's globally not a great thing. Is this actually an argument that the UK's comparative advantages in services is actually a safer place to be if Europe gets dragged into a US versus China versus the European Union trade war? Because everyone's going to be fighting EVs, we're going to come back to it in a second, but everyone's definitely going to be fighting about EVs, wider production on renewable energy. And actually, they might not notice the Brits sneaking around, flogging our films and our financial services and other stuff. So is this a good place to be?
Yeah, I mean, I think it depends how it materialises, right? Because we think about it as a China-US trade war, but what we saw in the first Trump presidency was, tariffs that were also placed on a lot of other countries, and massively impacted their trade flows with the US. And so, how will the UK, but other countries, the rest of Europe, be affected by a kind of broader protectionist trade policy that it might implement? The World Bank did a study that basically looked at this. If China and the US kind of go at it and start a big trade war. And I mean, the other thing to say is that remember that the tariffs that he put in place are still there. It's not like Biden took them away. So they're kind of already in the trade war to some extent.
But he's promised to do more.
But he's promised to do more. And if he does, the study by the World Bank basically said, well, if you are a third country, just stay open and just ignore it, because then they both kind of end up diverting towards you, and you actually do better off than if you kind of raise your trade barriers in response. But to your point about the UK being particularly focused in services, I mean, so it's not only global trends that make it a positive reason to be in services. Global services trade is still growing when goods hasn't been. But yeah, it does seem to be less the focus of where that kind of attention has been. I think, we still need to be realistic, whether we're going to end up getting new market access to the US in services, or, really kind of pushing things forwards is still looking quite unlikely. Yeah. But can we just kind of, keep flogging our exports to the US? We are quite similar to Americans, and they seem to like trading with us more.
We need to make the Barbies, the films, not the...
I don't think just so, Britain should forget about manufacturing. It's 9-10% of GDP, and it's pretty resilient. What's left, actually. Advanced manufacturing in the UK, some of those niche but very high quality manufacturers are world beating, and shouldn't forget that.
Just on this, I think as well, we often think of trade war and Trump. But actually, if we look at Obama was the one who put in the first restrictions. Trump intensified, Biden's largely continued. So the optics and the sound and the headlines have intensified. But actually, we've got quite a consistent cross-party approach to China in the US. And yes, I think it might intensify if Trump's back. I think we often overlook the continuity.
But that's just telling us that it's structural, basically. As in the politics is driving
I think
towards that
I think
generally.
I think there's something to be said for that. And I think then for the UK, I think the big question is what we do about areas of vulnerability where we're critically reliant on particular supply chains, for example, on advanced semiconductors. The temptation, I think, is to try and emulate the US and the EU and say, let's do self-sufficiency. But I think that's where we've got to be very careful as to, is that smart? Or do we then buy and rely on the EU and the US for some of these critical resources? And that's the bit I don't think we've yet figured out.
Okay, well, let's do that because one of the bits of trade policy that is growing, at least in people writing about it and politicians saying they're doing something, is how does trade hit security concerns? You've raised one of them, which is basically on chips, but you get the same thing on most inputs to advanced manufacturing are up in the discussion. And while security in the olden days meant food production, nowadays it means more broadly. Do you think that is how exposed is the UK to that, given what we actually produce? So we don't currently produce chips. We design chips. Arms price has gone up by another 50% or something in the last few weeks on the back of the AI demand, but we don't produce any chips. But the rest of the world is worried about that for the Taiwan reason rather than anything else. But there are other areas where the security concern, people are now writing, if you're in Whitehall now, you're writing papers on the overlap between trade and security policy. They've got lots of words in them, they don't have any policy in them. You're getting people now talking about, we do have more control on the sale of domestic companies to foreign owners than we did than when you were business secretary. Those have been brought in over the last few years. There's now a row about whether they should be tightened up or loosened. So are securocrats going to be in charge of trade policy?
Well, they are.
Oh, yes.
But I wouldn't say welcome.
Is that a good or a bad thing?
Generally a bad thing, but mainly because it's so lazy. You know, there was this long. I mean, you know, there's the French yogurt and so on. I know we're not quite as paranoid here.
Remind everyone about not everyone is.
Well, this was, I think, in the 70s. One of the French presidents declared, you know, we're going to have strategic industries, and
one of them
I think it was Danone that was threatened by a foreign competition or a takeover and has declared a security interest. We don't want to get into that silliness, but and I was heavily involved in all the arguments around Huawei when our own people judged that collaboration with China through Huawei was actually very much in our national interest. Didn't present an unmanageable security problem, but under pressure from the United States, we had to throw Huawei out. So it wasn't our security interest, but I think when people wave the flag of security, it's very difficult to argue against it because you can't quantify it. But I think it's been used in a lazy and rather dangerous way at the moment.
What do you think, Sophie? Is Spooks going to be running our trade policy?
Well, I mean, if you look at the kind of supply chain resilience strategy, or I don't know, we reference it in the paper, but it has these kind of 5 things that we should do about it. And one of them is, we need more kind of self-reliance, and we need to be producing stuff at home. And then the other one is we need to diversify our trade so that we have more suppliers. So it's kind of like, is it more trade or less trade that's the solution to stronger resilience? And I think the natural reaction is you see all these kind of trade shocks hitting the UK, and you think, oh well, actually, if we were more self-sufficient, then we would have less shocks, or we would be less exposed to this thing. But actually, you're just a lot more exposed to your domestic shocks, which will be bigger. So it's kind of, do you want sort of much more frequent small shocks or really big, painful domestic shocks? So I think
that is a really important lesson. People never say that. At least the paper had both those bullets in it. Because sometimes you hear people just saying security means producing it here at home, and then you're like, it doesn't. But when the turnip harvest fails because all we're eating is stuff in Britain, well then there's nothing left. Whereas, I mean, and you should be eating turnips, I'm sure they're very healthy, but you want a diverse supply of your turnips so that when one country's turnip supply fails, not everybody runs out of turnips. Leaving turnips to net zero, because you've all raised that, and that is in lots of areas where you're going to get a lot of the issues we've been talking about. So manufacturing, Trump wars, security come together in how do we deal with net zero. So one of the questions, an anonymous question here, which means a civil servant is asking, is will a UK CBAM help protect us against trade exposure? We generally, why don't you tell everyone what a CBAM is and where we're up to and how much we're going to end up copying the Europeans?
Yeah, so it's a carbon border adjustment mechanism. It's essentially when you are charging for carbon domestically, the argument is that that puts your suppliers at a competitive disadvantage from countries that aren't kind of taxing the carbon in their countries. The EU has kind of is sort of much more advanced in the process of implementing its version of the CBAM, and the UK has been consulting on what the UK is going to do. It looks very likely that we'll have some kind of similar scheme in place. I think the really big question at the moment is how well aligned those two schemes are, both from obviously that's really important for firms that are going to have to be operating both of those processes. It's also really important for our UK firms because if they are fully aligned, which requires quite a lot of changes to our carbon pricing program, alignment of our kind of carbon pricing with the EU as well. But it means that you don't have to operate that process at all. You can just kind of bypass it because you have perfectly aligned systems. So I think it's going to play a very important role in terms of whether we decide to align with the EU on it.
Vince, you were saying earlier on, so you're in general more relaxed on the China front than I'd say is the consensus view of people standing for elective office or appointed office actually in the EU these days. Is there any way we're getting through the 2020s without basically banning a lot of Chinese cars in Europe?
Well, I hope we don't go down that route.
Your mic is being crushed by your hand.
I mean, we have a sort of precedent of how to deal with these things with the Japanese, because we went through all this before. And whatever you think about Margaret Thatcher, she had a sort of an intelligent approach to this, which is instead of banning Japanese cars, getting them to build them in Britain. And I think we're probably better going down that route with the Chinese.
Do you think we're going? But the question was, are we going to? What's actually going to happen? All I would say is it looks like the Commission is going to end up going down a less.
I don't think they're going to ban them. I mean, I think you're going to get a very messy reaction in Europe. If you're a European consumer, the Chinese cars are cheaper than they're cheap, they're high quality, and they're environmentally friendly. So why would you want to just exclude them from the market? So there will be pressure to have anti-dumping duties, which will probably happen, however inappropriately, or countervailing duties. But I think we will eventually adjust to it in the way that we have to other waves in the car industry.
Just to give you the counter argument, so there's a guy who I won't name this is before the last presidential election in France. So this guy who was involved in running Macron's election campaign out of nowhere asked for a meeting because he happened to be in London. I didn't know the guy. He didn't say what it was about. So eventually turned up and met him, and basically the entire discussion was basically, we cannot have the French car industry being hollowed out by this. You will have Le Pen, you will have the far right, and I don't give a toss about your liberal arguments about the consumers. I'm not having that, and so we're going to be banning this. So just a counter, gently.
But this comes back to this question then supporting those industries that are not necessarily very competitive to then upskill, upgrade, support workers to move. Because I think, again, it comes back to us not having supported the communities that are adversely affected by trade shocks. And I hear, Vince, and I agree with you on so much of that. If we need desperately to move to a much greener economy, it's an absolute imperative. And we've got to get the politics to align with it. And neglecting some of the distributional implications of trade at our peril. But the answer then is, do you want the EVs banned or not? We've got to be. Green energy, thank you, China, right? In the sense of we've got. But
do we want the? I mean, this is like in the next 2 years, European policymakers, including in Britain, are going to decide whether they're letting large-scale Chinese imports happen or not.
Only if they're done. Like if they're really artificially subsidised, but they're not. They're unlikely to be. The reality is that we see, but I think China could be very competitive in EVs without subsidies. So even if that, I think that's the interesting point.
Yeah. I mean, the real issue, I think, currency is not Stellantis. Actually, it's Volkswagen, it's the BMW, and Jaguar Land Rover, all of which actually are making vast profits in China.
In China.
Yep.
So that's
complicated for them.
It's complicated.
It's definitely complicated for them. Right. Okay. We should start to wrap up. Let's give us one last thing to go into, like, for policy making. So we've discussed all this exposure side of things. Is the most important thing that matters in this space trade policy, security policy, or is it just like wider economic policy, you were basically calling for a good social democrat settlement. Is it when we think about, because this is complicated, right? We've gone through loads of different overlapping exposures that affect different people and different households in different ways on the consumption side, the production side, different time periods. So should we spend our time thinking about trade policy, or should we actually just be like, look, let's get the basic economic policy right. Trade policy is pretty minor when it comes to these things. Like, as you said, it's not the trade policy that determines how many workers really work in the manufacturing sector. It's more to do with other developments. So each view on that, and then we'll have a poll, and then we'll wrap up. So, Sophie, trade, economic, security, something else?
Well, I think having a sensible economic policy that underpins, the economic strengths is really important. But I will talk about the trade strategy, because I think, first of all, it needs to be aligned with that economic strategy that you have. And secondly, it needs to be kind of modernised, and it needs to be specific to an economy that looks like the UK. And I think that's probably one of the areas that we've been failing in recent years. So, we are, as has been said, the second biggest services exporter. We've talked a lot about professional services becoming more export exposed. We've talked a lot about how that has affected the trade exposure of workers. But we haven't really talked about what that means for a trade strategy. And we've done, work on this in the past. But ultimately, the kind of traditional trade tools that get used, free trade agreements, but also the kind of countervailing measures, the ways that you respond to trade threats, have all been very focused on how you deal with trading goods. And so we do need to kind of be thinking, as a major services trading economy, what does a services focused trade policy look like? And we've set out what that might look like as a starting point, some services trade agreements, but just more broadly thinking about that in a bit more.
Very good. Impressive plug for the back catalogue there, Sophie. Yeah. Vince, what do you think?
Well, I would say that a central part of economic policy, particularly if we get a change of government, is to have an industrial strategy. And that is implicitly about trade policy in part. But it's also about a lot of other things, horizontal, vertical, blah, blah, blah. And on security, of course, you've got to check that there aren't too many Chinamen hiding under the bed, but it shouldn't be driving our national economic policy.
Right. Emily.
I agree with both of those points. I think we need to be a much clearer economic strategy and a trade policy that feeds in and is actually coherent and linked across skills.
That would be nice. Very good. Right.
Here's for wishful thinking.
I'm in pro-wishful thinking. It's got some of us through the last 20 years. Right. Now, here's our last poll to wrap us up. What are you most worried about? So, is the danger that loads of our workers are now dependent on export markets, and those markets, we talked about services, but it's also true on some bits of manufacturing, those markets disappear? Is it that we should worry about cheap imports? That's the old problem, that's the farmers, because there'll be no jobs left for the people who they're competing with. Should we worry about expensive imports? That's like, have you all paid your energy bill in the last few years? You just want to carry on worrying about Brexit, or do you want to worry about, and I know where this is going to go, but I mean, it's a free country. Or is it deglobalisation? Generally, again, we generally mean deglobalisation here on the goods side, but it's potentially possible also on the service side. What are you most worried about? So let's give you one sentence each from you, and then we'll see what the punters think. Sophie, what are you most worried about?
What am I most worried about of these? I knew this poll was coming, so I should really be the most prepared. I think what the report suggests is that the trade exposure to exports has been increasing, and so the most undervalued of these, or the most...
See what you did there?
Yeah, the one that is not getting enough attention is the first one.
Very good. I mean, what are you worrying about?
Yeah, on the first one, I'm changing it from losing markets. I think it's displaced workers in those services.
Because of that. Okay, very good. Vince, what's on your list?
I would say deglobalisation as a negative, and that we're potentially heading to trade blocs which we're not part of.
We are definitely exposed to that world occurring. Right, okay, let's bring up the results of the poll and then wrap us up so we at least know what we should be angsting as we go home. I think that is not surprising. I'm with the democracy on this. Like, have we just been through the last 2 years? It was pretty terrible. It needs to go away. I want cheap gas flowing in all over Europe. That's what we need, everyone. And on that happy note, can we all thank our panel for everything today? Thank you all for coming. If you want another Resolution Foundation event beginning with tea, we're going to be talking about tax cuts on Wednesday because the budget is coming, but tax cuts are not actually. Have a nice day, everyone.